So you've probably seen the statement or read about treat your trading like a business, and I've spoken about this before on a previous story, but I thought I'd go back over it again. And it sounds like a cliche headline or a statement, and most people are probably left thinking, well, that sounds nice, but what does it actually mean? What are the similarities? Why is that comment made? But ultimately, the most important thing are what actionable things can you take away from it. So I thought I'd go through what the similarities are and why they're important, and that way hopefully you can take some action. So the first thing is, if we were to start out opening a new business tomorrow, just like if you started trading, then one of the first things you would do is start a business plan. You would work out what your projection looked like if you were trying to seek investment from a bank for a business startup loan or something like that. You might have projections for 3 months, 6 months, 12 months, 5 years, and that would be your plan. So you would need a plan in your trading, and that plan would be, yes, based around strategy, what you're trading, when you're trading. It would be why you're trading, like why you're going into business. So what's your niche in business? What's your financial edge when you're trading? And that's why trading and looking at some longer term goals is important. The next thing, one of the key business lessons that anybody will tell you in business or advising people going into business is that cash is king. So if you run out of cash, you've got no business. You can't keep the lights on, you can't keep either buying stock or operating. So trading again is the same. If you run out of money, then unless you're looking to then find reinvestment or put more money back in, the game's over. And in business, that would mean your business is over too. So cash is king is really important. The next one is that in business you've got expenses, you've got costs, be it if that's property, product costs, interest loan, marketing, all of that stuff. And in trading, your costs are going to be, or likened to, you're losing trades. So what's important is your net profit, but to get your net profit, you're going to have your gross profit, which is the winning trades. You've got your losing trades that will come off that, and then you've got your net profit. So losing trades are simply a cost of trading and doing business in trading. So start thinking about your losses logically like that. It's impossible to trade without incurring losses anyway. So there's a relative similarity. The next one is two things really. One is scaling at the right time, and then that in turn is controlling expenses like trading too. Picture the scene, you set up a new business, you wouldn't be spending all your money in month one on growing the team or buying premises that are far in excess of what you need at the beginning. It's about scaling and growing at the right time. Trading's the same thing. If you were to enter a massive lot size trade from day one, or try and accelerate, this is the bit that hopefully resonates, that 5-year plan on your business plan into 1 month, then that's also going to cause you some issues. But that's what people try and do. They don't come up with a plan, they don't think longer term, they're always thinking in here and now, short term, the day, the week, probably not even the month, probably the day or the week, and trying to get rich quick in that period of time. You wouldn't do that in business, you wouldn't last 5 minutes, so that's important. Last one is perseverance. So when you're in business and you hit a tough patch, inquiries dry up, you have a poorer month for whatever reason, could be coronavirus, could be exterior led, could be lack of marketing, poor customer service and people leave you, whatever. Very rarely do then business owners go, tell you what, I've had enough, I'm going to quit. And one of the most important parts of people traits of people that are successful in trading is that they don't quit. So if you don't quit, there's one box ticked. And if these business owners quit, then that's going to be a problem. But also if they then decide that, tell you what, selling shoes, I'm not going to do that anymore, I'm going to now go and sell washing machines, and they change their business niche or why they went into business to start with. And why that's similar to trading is, as soon as you hit a difficult spell in your trading, you're probably then just going to look elsewhere and look for the next strategy and plan, without realising that that was just a loser run at that time, and to stick at it. Yes, manage your risk and reevaluate, but Don't just keep hopping from group strategy to different groups. So hopefully some key parts there, but the key to a three. Cash is king, perseverance, things take time, losses are expenses, and you need a plan. So hope that helps explain why that quote's used and how it can help you take action and get your ducks in a row.